Darrell, I'm so happy to see you, man. It feels like we were just in Vegas yesterday, and my how things have changed since we were in Vegas just a few weeks ago. It seems like you're being quoted in a story every single week right now, whether it's the Journal, whether it's CoStar. You're keeping your IR folks very busy, and so I'm very honored. I know we have a great relationship, but I really appreciate you taking some time to chat with us. Just want to make sure you do see the screen up on, you see the presentation up on the screen?
I do. Oh, I don't see it up on the screen, but it's great to see you, David.
Oh, you do not see my presentation. Let me try this again.
Oh,
Stop share. Glad we're doing this
can we
quality
get
control
started
check
again?
before we start. Share. It says it's sharing.
There it is. It's sharing now.
Okay, good. Um, so we're going to do like a quick high level just for those that don't know Easterly, and then we'll jump into the questions. Um,
Perfect.
Very simple mission. You guys focus on acquisition, development, management of Class A commercial properties leased to the government. We know what's going on with the government right now. Obviously, you look at mission critical assets. I think that's the key that a lot of people take away here. Uh, from your earnings press release and your March presentation, 100 properties, 9.7 million square feet of space, going to grow. 92 operating properties leased to tenant agencies. I do have a slide here that highlights a bunch of these agencies: FBI, TSA, EPA. This is all from a lot of your
Yep.
website and your
Yep.
investor deck that you guys have published.
Right.
But a lot of obviously organizations that we use every single day. And for all the stuff that's going on in DC, again, I don't think we're getting rid of TSA anytime soon, or some of these other, or the FBI. So,
We're not.
there's a bigger story here. I took this from your deck. This is very important about how it highlights what you guys look at, your mission critical strategy, the type of tenant that you guys are looking at, your focus. Also, this great map looking at where you guys have properties coast to coast, both development, hard asset, leasing side of it. But I think, some great color in your presentation. And then obviously, as we, get more into it, when you break out the pie, looking at all the different, weighted exposure to a bunch of your tenants. And like I said, for everybody that's watching this, this is directly out of Easterly's investor presentation from March. So this is very current information. So with that, we do have questions. And Darrell, it's stuff that you've been answering all the time right now. So let's just jump into it. How's Doge impacting you guys? What is the future outlook of government office? Do you see more cuts and layoffs impacting your business?
Yeah. Well, I mean, I'd say Doge is impacting us with essentially headline risk because people are confused. They don't understand what Doge is doing. And as I'm fond of saying, we've been practicing Doge before Doge because we are, as you saw in that pie graph earlier, half of our portfolio is the Veterans Administration, the FBI, and then built to suit for government agencies, and I would say almost another 40% is very specific mission critical buildings that are being used to service very specific functions and missions in the U.S. government. So today, Doge is about finding efficiency, which if the government behaves more efficiently, we can be a better private-public partner to them. We can deliver a square foot of real estate to the government cheaper than the government can create it for themselves, even with their cost of capital allocation. We know how to manage the real estate. We know how to provide them buildings that can satisfy mission. If you look at the US government today, their portfolio has over $80 billion of deferred maintenance that's stacked up. You can absolutely understand why, because the US government, when they get appropriated money every year, if there's a cut, the first thing they do is not repair the roof on one of the buildings that they own, and they put that money towards mission, which makes all the sense in the world. But for us, as a private real estate manager owning the property, we can keep that property maintained, minimize the deferred maintenance, and really give the government the opportunity to work in the best facilities that can always facilitate their mission, so they don't have to walk around buckets with water dripping from the ceilings like they do at the FDA lab in Washington.
So do we see a lot more cuts going? Do you think we're at the tail end of this, or do you think we're just getting started?
Well, in a set of ways, each agency has been asked to come up with their square foot requirement by the end of this month, and they've got to come up with a plan. Obviously, they're going to pick the buildings that are in the best shape in order to consolidate agencies in, and bringing portions of the government together. They have too many leases that are out there. For us, that's a real tailwind for our business because the GSA has stated publicly that they want to start leasing more of their portfolio than owning for all the reasons I mentioned related to deferred maintenance. And for us, we are a specialized private partner, to the US government. And so as we look forward, we are going to see consolidation into our buildings, and we're already seeing many of the mission critical buildings that we bring forward, like the FBI, like the DEA. You can see DOGE and the Trump administration are emphasizing the mission and activities that are going on in our buildings relative to some others in government. So it's very exciting because we've been working for the better part of a decade to know how to be the best partner to the US government. And what we're seeing today, as they care for efficiency and balance sheet and all the things that we can provide, we are actually going to become a more favored partner for the US government as this moves forward. So I'm excited for the headlines to go away, and I'm excited for people to see that our portfolio has really stood our underwriting stands the test of DOGE, and in fact, we think it's a big opportunity for us to do a better job for the US government and double the company.
With some of the stuff that you're starting to see, as you mentioned, some of these properties that are potentially coming to market, is the phone ringing more with like potential partners, like sovereign wealth guys? Or again, I know you can't talk about deals that you're involved with or, closing or whatever, but like, is the phone ringing more because of the fact that you are that, I almost call it like the exclusive. Like, when I think of government office, Easterly is the first company that I think of that like those investors that have the 25, 50-year investment time horizon that a sovereign wealth fund does, that a family office does. Are those types of people reaching out to you guys to potentially work with you on stuff?
Yeah, I'm really glad you mentioned it, and it is true. We've got two types of phone calls. One, folks who are interested in investing because they believe that there's an opportunity. Anytime you see this sort of confusion in the market and uncertainty, it provides folks who are contrarian to do very well and make investments that can compound well over the years. We find ourselves in that spot right now. We're also getting phone calls from folks who own these buildings or are developing these buildings, and they're having a really difficult time getting them refinanced because the banks can't make heads or tails of these headlines. They don't understand where DOGE is going. And until that settles out, the financing market for these buildings, especially for your smaller borrowers, is going to be very difficult. So they're facing the maturities of debt. We all hear about in real estate this wall of maturities, that over $1 trillion that's maturing on commercial real estate. So we find ourselves in a place where we can very much be a buyer who resolves some of the financial distress issues, that are facing, some of the smaller owners of these buildings.
So you briefly touched upon it. I didn't write it on the slide, but you opened yourself up to it. You talk about the commercial real estate wall of debt that's coming due. Does Easterly have a wallet debt that's coming due for the person that doesn't have the page up on the screen or whatever? What should they be, again, seriously, like what do they think about when it comes to Easterly with debt?
Well, we've been very deliberate about our debt schedule. We have a staggered set of debt maturities that go out for over 10 years. We most recently issued a private placement in this market. And why were we able to do that? We were able to do that because we are known as one of the best in this space. And we have tremendous support from the insurance folks who are generally, the biggest purchasers of our private placement paper. As we look forward, we're very excited to have an investment grade rating and ultimately become a public bond issuer, in the next year.
And with the 10-year trading sub 4 right now, it only potentially helps you out when you guys go to market down the road. All right,
Absolutely.
So we've talked about how DOGE is impacting you because, again, you're seeing opportunities. We've touched briefly upon the potential future outlook of government office. You've talked about potential future cuts, and we've already addressed this. All right. So how do you position yourself going forward about the message? How do you go on offense with messaging saying that this is good for us, actually? Do you look more towards the development side? Because, again, you guys have this development arm that you're very active with. This week, the headlines are on tariffs and Liberation Day. Are you guys impacted by tariffs? Let's talk through that real quick.
Great. Well, starting with how we're positioned in this environment, we're as And when you sort of squint at everything, we continue to get on earnings call after earnings call and say that we are on a path of growing 2 to 3% in FFO. You've seen that in our earnings guidance, and we continue to move forward with that message. And so folks just need to see us do what we're doing. We're very excited about our ability to build our portfolio, not only in the government space, but in the state and local, as well as the government adjacent space. You can see there is tremendous investment happening in the United States today, particularly to build manufacturing. So when we look at the development opportunities, there are significant projects that are getting funded. Today, we're going to be building semiconductors in the United States. We're going to be building more satellites. We're going to be building, more programs for space than you've seen before. And all of that provides an enormous opportunity for us. Meanwhile, when we talk about there being $80 billion of deferred maintenance in the government portfolio, that means many of those buildings are obsolete. The average age of a government building is around 50 years, and the FDA lab needs the most sophisticated facilities. And we're going to see government get reborn in an efficient way, on an efficient footprint, but they do need these buildings to be efficient and to support their mission. When we look at Liberation Day, we're 100% made. And as President Trump said, the way to avoid the tariffs is to have everything you do be built in the United States. So our revenue stream is not affected, by these tariffs or a trade war. On the development side, there will be price increases, but those are borne by the U.S. government in developing our projects. We have the ability to build a warm shell for them. In all the development projects we currently have underway, all of our supplies are bought and in the U.S. That includes the steel. So we have no vulnerability to our development projects being less profitable and less accretive in the future because of the tariffs. And as we go forward, everyone's gonna learn how to price, tariffs and materials, into the process. We're probably not bidding new jobs for another 4 or 6 months, so everything's going to be in great shape by then, with regard to price stabilization.
One question that I've gotten a lot about recently is dividend. As you know, a lot of our investors are retail oriented, income focused. They care about the strength of the dividend and protecting that. What can you talk about dividend coverage and safety? And obviously, with these opportunities that you've been touching upon, do you see avenues to continue to grow the dividend in this volatile environment?
Yeah, I mean, I think talking about the dividend, we are, and as we've said very clearly, our business is growing, and if we're growing at a 2 to 3% rate, we certainly get to the place where our CAD is covered, by the end of 2027. One of the things that we look at as a company is we certainly need more capital, given all that we're doing. So as we think about our dividend policy and how we move forward, we need to get approval from the capital markets and make sure that our dividend policy supports our growth plan. So as we are moving forward, we can get to a place where the company is continuing to grow its dividend, consistently over time, which is, I think, what investors like to see.
So obviously, it's kind of weird to ask you this question this week with all the stuff we've been seeing, but what's keeping you up at night these days?
Well, it really is fun to check your phone and see what's happened next. Every day there's a new set of leases that are getting terminated, or the president's got a new initiative, or we're seeing exciting things happening, like, in our Tampa facility. We saw the Colombian drug cartel folks get paraded through and brought back to the U.S. For trial. We're seeing day after day interesting things happening at many of the facilities, some of which I just can't talk about. But most of what you see law enforcement doing is happening at a building that we own. And so it's really exciting to see how we're able to satisfy mission. That said, we are just very busy with all the opportunity that's in front of us. I'm so grateful that we've spent a decade building expertise. We have a leadership team at the company that is seasoned and really excited about these times. And I know we can be a terrific partner to the U.S. government, because as we do this, we also know we're doing something that is for the nation, and we can help them solve what is a very big problem among many problems. And if we can contribute a little bit to getting that budget deficit closed, we're very excited to be a part of that activity.
Well, then you teed yourself up pretty easily for my last question that I have before any of the audience wants to share questions with you. But looking ahead into 25 and beyond, so why Easterly, and what is the value proposition looking forward?
Yeah, I mean, I think we have a definable edge in this space, which is we understand how to be a private partner to the U.S. government related to real estate, particularly mission critical real estate. And that's labs, that is law enforcement centers that have special space like SCIF space. We know how to develop these buildings in a way that we can deliver real value to the government. You know, I've told you, David, a little bit about those FDA facilities that we've built. We've built 3 of them. There are 3 new labs in the US, in Alameda, California, and Lenexus, Kansas, and now we're finishing one in Atlanta. The US government wanted to build one in Denver, their 4th lab. They've certainly learned how to do it as we've worked alongside them, but their construction costs are 3.27 times the bid that we have on that building. And it's been really exciting to see, you know, for Doge and all their chainsawing, that's a project that has come to a halt, and it's very clear for them to see, you know, that having a private developer do that space is better for the taxpayers. So we're very good at what we do, and we have the financing and the access to capital and we have the balance sheet to support these very large projects. And the U.S. government is continuing to build its footprint and exercise its mission. So we think we can be a terrific partner as the government continues to move forward and modernize itself for the next 100 years.
How's the farm? How are the animals doing?
Oh, thanks for asking. Very good, very good. As David, as you know, we raise alpaca, and they are pleased, and every animal loves spring. So they've got a lot to look forward to.
That's right. It's the harvest. It's all right. It's good season for you. Larry, Macy, got any questions for Darrell before I let him go recover on his Friday and start his weekend early? Going. Darrell, I can't thank you enough for taking a few minutes out of your busy week. This is craziness, I know. I know our audience really appreciates getting your very timely thoughts. Earnings on the not too far distant horizon. NAREIT, it's going to be very interesting come NAREIT here in a few weeks. I'm in New York next week at the NYU REIT Investor Symposium. It's going to be very interesting to hear what a lot of your fellow CEO peers have to say about the current environment. But I really thank you for taking time out of your schedule to do this with us.
Yeah, pleasure to be with you, David. And I think you do a great job translating sometimes of this complicated stuff, you know, into some, you know, very simple illuminating points for investors. And we really appreciate all your efforts to do exactly that.
Thanks, Darrell. I appreciate the kind words. We'll talk to you soon.
All the best. Take care. Bye-bye.
Take care. Bye-bye. Abdullah, did I do okay?